Ostis, in his 2020 work on page 90, he would agree with both Hobbes, Jean-Jacques Rousseau, and Brederode. Ostis believes that the system of taxation only works if people pay what tax planners have calculated that they should pay. If people don't pay what they are calculated to need to pay, then there is a loss of revenue for the government, or the tax gap. Part of morally interpreting tax laws, according to Ostis, is embracing the spirit of the tax law rather than just taking it literally. Ostis argues that the tax system is fair because it limits the government from arbitrarily imposing taxes without a law first being in place. It also limits government officials from arbitrarily taxing people. Thus, the sentiment of the taxpayer, according to Ostis, should not be to view taxes as a cost-to-benefit ratio, but to rather to see paying taxes as a moral obligation. And this is from page 90 and 92. According to Narty, in his 2023 work on page 260, and his study on the neurological link to taxes and morality, his feeling is that moral people do not avoid taxes, nor do they cheat on their taxes, but rather they pay their fair share. According to Narty, in order to live with dignity and to hold on to virtue, people must pay their fair share of taxes. The less moral are those that are locked into a cognitive bias and try to avoid paying their fair share of taxes, whether it be through legal means, such as tax loopholes, or less than legal means, such as tax evasion. According to Stephen Johnson, and this is regarding and he is against tax gap closing. According to Stephen Johnson, the main tax preparers, research, and lawyers, and the like, so the entirety of the tax community agreed. The majority of the tax community agree that it is their moral obligation to assist the taxpayer, which is their client, in finding and exploiting tax loopholes. The tax community considers one as going against best practice if that person does not assist their client in paying the absolute legal minimum on their taxes. According to a former IRS acting chief counsel, he is even quoted as stating that using tax loopholes is his duty not only to his client but to the tax system. By exploiting tax loopholes, taxpayers illegally increase the tax gap by paying less than what the government has originally calculated them paying. Specifically, somebody who is against tax loopholes can be found in the work of Daniel Ostis and Axel Hilling. This is different from the Ostis work that we quoted earlier. And their work was in 2016 on page 748. They argue against tax loopholes, citing that the morality of those working as tax advisors, preparers, etc. are instead morally obligated to close the tax gap. The tax gap is defined as the difference between the income tax and the income tax that is collected. Income tax due and income tax collected. It is argued that about 1/5 of the taxes are not collected annually due to loopholes and tax evasion, and the number equates to about $3 billion in the United States. So, in their study, even in the UK, again, it was about 1/5 of the taxes were not collected. So, generally speaking, when we look at a nation, there is likely going to be about 1/5 of their taxes that are not collected due to loopholes and tax evasion. The conclusion of the tax gap matter, it comes down to the real question then becomes, whose interest is the tax community most beholden to? Is it the federal government in closing the tax gap, or is it their clients and helping their clients pay the absolute minimum? If the moral obligation is to aid the government, then the tax community should strive to ensure that as many taxes as possible are paid and collected. However, if it is to one's client, then the community is required to save the client as much money legally as possible through the use of tax breaks, loopholes, and the like, which makes it their legal